Subscribers, do you ever laugh at something, not because it's funny, but just because you don't know how to react to it? That's me in this situation, okay? I've got to show you something that's utterly ridiculous that I'm seeing going on in the market right now and take you in depth in this video, okay? I just want to get straight into this. This is ridiculous. I just saw this and I'm like, you got to be flipping my flapjacks. You've got to be flipping my flapjacks, okay? Toll Brothers, they just reported earnings, okay? Going into this earnings, the stock was near an all-time high, okay? Near an all-time high, and after hours, the stock is popping. And I said, okay, they came out with their earnings. What's going on here, okay? This is a little surprising. And I kind of read in headlines, Toll Brothers had an earnings beat, the stock rose. Toll Brothers Q1 in revenue top estimates, okay. Toll Brothers reports their earnings. Toll Brothers beats expectations as home demand starts to rebound. I said, whoa, this is a holy smokers, this ain't no joke, because wow, the whole real estate market's going to be great now. This is tremendous, okay? And so, you know what I say? I say, I don't really care what the headlines say. I'm going to go to their investor relations page. I'm going to do a little in-depth research here, okay? And see what's really going on with their business, okay? And so right off the bat, I see here, fiscal year 2023's first quarter highlights. Net income and earnings per share were $191 million, $1.70 a share, compared to net income of $151 million and $1.24. Oh, wait, first off, that's amazing, okay? Toll Brothers, great company, a great number right here, okay? Great number, right? Pre-tax income, $253 million compared to $200 million at the same time last year. Holy smokers, those are no jokers. Those are great numbers. Home sales gross margins, 25.6% compared to the same quarter last year of 23.6%. Very impressive. Adjusted home sales gross margin, which excludes interest and inventory write-downs, was 27.5% compared to 25.6%. SG&A as a percent of home sales revenue was 12.1% compared to 13.4%. This is phenomenal as well. Income from operations, $225 million. Other income, $16 million. The company repurchased a bunch of shares. So at first glimpse, this is looking amazing, okay? Amazing. Margins going up, revenues and net income almost at all-time highs pretty much in the company's history. This is all phenomenal, okay? But then we dig just a little bit deeper and we start to find a canyon of problems. Let me show you where the problems begin here. Look at this. Home sales, okay? Or 1.7 billion, up 4% compared to fiscal year 2022's first quarter. Delivered homes were 1,826, down 5%. So delivered homes is already dropping, but that's just the tip of the iceberg. Net signed contract value was 1.5 billion. That's down 51% from fiscal year 2022 first quarter. Contracted homes were down 50%, okay, which means their backlog is decreasing in an epic way. Backlog value was $8.6 billion at the first quarter, down 21% compared to the same quarter last year. Homes in backlog were down 32%, okay? This is telling you that Toll Brothers business is about to be in an epic decline, okay? Not a small decline, not a little baby decline. We're talking Toll Brothers is on the precipice of a epic decline in their business model, in absolutely everything about to tank here, okay? A few other things here. Look at this company. They paid out a quarterly dividend. They also bought back a bunch of shares, okay? Now, I can tell you, if I was in Toll Brothers' shoes and my backlog was decreasing at a rapid clip, my contracted homes is now down 50%. Down 50% while we have unemployment that's pretty much the lowest we've ever seen in United States history. I would be very concerned with my business and what could transpire over the next few years. And I would just be a little more prudent with cash in this given time period. I would say, you know what? Let's maybe just cut the dividend now. I understand our earnings are great right now. Let's maybe cut share buybacks and let's just stack cash for a little bit. Just in case. Just in case it gets ugly, because we don't really know when your contracted volumes are down 50% year over year. It's a good time to just kind of pause and say, we don't really, Toll Brothers, they don't hold their own fate in their hands. They don't control this. If the housing market's going to go insanely weak and be down for many, many months, or let's say, dare I say, years, They can't control that. At the end of the day, they are just a byproduct of however housing's doing at that particular time, of whatever mortgage rates are at that particular time, of however the economy and confidence is at that particular time, okay? As well as trends that are going on in the real estate market in general. They are all just a byproduct of that. And so yet they're out here, while their volumes are plummeting, their backlog is plummeting, and they're paying out dividends and they're doing share buybacks. And it's like, dude, I would just chill for a little bit. If everything's fine, a year from now, 2 years from now, fine, then bring back the dividend, okay? But no, when your backlog and your homes contracted are plummeting like this is a good time to just chill on this, okay? But what else are they doing right now? Oh my gosh, she can't make this stuff up. Well, the company that already has 71,300 lots, okay? They just went ahead and they bought a bunch more lots. They just spent $262 million on another 1,700 lots, okay? As if they didn't already have enough lots. $262 million, okay? So let's get this right for a moment here. This company's backlog is drying up rapidly. Their contracted volumes is down like 50%. They're paying out dividends that are among the biggest they've seen in many let's call it years, right? They're buying back shares left and right. And they just spent another $262 million buying lots at pretty much all-time highs. I mean, all lots right now are going for pretty much all-time highs, or at least have over the past 1 to 2 years, right? While they already have 71,000 lots under control. And it's like, really, like this is a time period you're going to spend like insane while your business is getting absolutely obliterated and you have no clue if this is just the start of things or if, they don't know. Okay, that's a bottom line. They don't know what's going on here, right? No one does. The backlog, look at the backlog, okay? This shows you by territory. And oh boy, is this getting worrisome. This is in the north, okay? The north of the country. 1,000 homes in backlog right now versus 1,800 at the same time last year. Mid-Atlantic, 927 homes in backlog versus 1,143 at this time last year. In the South, 2,400 homes in backlog versus 2,800. In the Mountain Region, 2,200 homes in backlog versus 3,700 at this time last year. 989 homes in the Pacific under backlog right now versus 1,700 at this time last year, okay? That's an epic decrease. So now 7,700 units in backlog versus 11,300 units, right? Dollar volume down substantially. And this might be the most worrisome part of this, okay? In terms of their backlog, look what's happened to it. It's exploded in terms of price. $1.1 million is the average price per unit now that Toll Brothers is at, okay? I can tell you that's not sustainable. From 956, which was already a very high number, to now 1.1 million. How many folks are going to really be able to afford these homes, with interest rates the way they are right now, okay? Oh my gosh, okay? Let me give you an analogy, okay? And a real life analogy of something that happened to me that reminds me of Toll Brothers' business model right now. Because you see Toll Brothers reporting these insane numbers, right? Incredible numbers, great margins, great revenues, great net income, okay? And it's giving this facade like they are doing so amazing, right? And I'll give you a real life example. And I remember this very specifically, okay? This was an invitational meet in my senior year of high school, okay? And I joined track, okay? And then before that, I played football. And I was pretty fast in football, but I didn't really realize there's a different speed between football and track, okay? And so I looked at my first race I had, and a gentleman that was in that race, his name was Marcus Wheaton, okay? And he went to Chandler. And I knew this guy was really, really fast. It was a 400 meter, okay? Which is, for you, those of you that don't know track, it's one lap around the track, essentially, okay? It's almost an all-out sprint. And I thought, oh man, I'm so fast. I'm going to dust him, okay? This is going to put me on the map, okay? So we get into this race, right? And by the way, he ended up going on to play in the NFL and whatnot. He definitely wouldn't remember that race. It was just another race of people he was smoking, okay? But nonetheless, get ready for this race. I'm all jacked up. I go out flying this first 250. And I hit the wall, okay? I mean, I was done. I felt like death. I'm like, oh my gosh, and there's still another 150 meters left in this race. And there goes Marcus Wheaton right by me, and just absolutely crushed me, absolutely devastated me. And it reminds me of Toll Brothers' earnings in this situation, right? They're coming out swinging from the gates, and you see this incredible revenue. And just like in that race, you would thought, man, maybe he's going to win it, right? Maybe that Jeremy guy, maybe he's going to win it, the new guy to track, right? And then it all falls apart. And you're like, oh boy, okay. Yeah, that was just a little fake facade that was put on for a little bit there. And it kind of feels like Toll Brothers numbers are that right now, okay? Now, this is where things get really interesting. The CEO commentary. Check this out, okay? Since the start of the calendar year, we have seen a marked increase in demand beyond normal seasonality as buyer confidence appears to be improving. We believe the recent pickup in demand is a sign that the long-term fundamentals underpinning the housing market remain intact. These include favorable demographic, migration trends, a very tight resale market. What? Well, I'll show you something in a minute. What are we talking about? No, okay. And growing pent-up demand resulting from over a decade of underproduction. Oh man, you can't make this stuff up. Notwithstanding near-term uncertainty in the economy, we expect these factors will continue to support the housing market well into the future. Oh, okay. Let's break it down like this, okay? I'll break it down like this, okay? So first off, Toll Brothers. Who is Toll Brothers buyers? Okay, they're usually the highest income folks of the folks out there. Okay, in terms of people that buy homes, they usually have very high credit scores, right? And they're just in a different market essentially than almost every other home builder, right? All these other home builders kind of sell homes anywhere between, let's say, $276,000, right, and about $500,000, and then you got Toll Brothers up here at $900,000+, right? And this was as of their previous quarter, by the way, which now their backlog is 1.1 million on average. So, soon this number is going to be over 1 mil, right? So the best way to put this is Toll Brothers sells to rich people, okay? That's the best way I could put this. Toll Brothers sells to rich people. And, you look at their homes and it's pretty obvious, the caliber of homes these folks are selling, right? Well, if we think about rich folks, right? If we think about people that have money, well, generally, those people are invested in the stock market. And so many times these folks' confidence can go up or down based upon how the stock market's doing. If the stock market's doing great, they feel great. Their confidence is up, which means they're more likely to go buy a home. When, let's say, the market's going down, their confidence shrinks. They don't feel as confident. They're not as likely to go spend out there, right? It's no different than if you told me let's say my portfolios were all double the amount of money they have in them right now. They're all double, right? So let's say the public account has $1.4 million. Let's say instead of 1.4, it was 2.8 million today, okay? I'm suddenly feeling much more confident. I'm suddenly feeling like I could spend more money, right? And whether I go do that or not, it remains to be seen, but I'm going to feel more confident just because my account balance is a whole lot bigger number than it does currently, right? And so when the stock market's going up, great. The Toll Brothers is likely going to see an influx. But guess what, okay? Guess what happened in January when they're talking about this? Well, the stock market did tremendous. It came flying out of the gates, right? S&P 500 was up 6%. The Dow was up 2%. We know the Dow's a joke, okay? The NASDAQ was up almost 11%. Almost 11 flipping flapjacking percent. That's incredible, okay? Absolutely incredible. One of the best months you're ever going to see for January for the NASDAQ. Literally one of the best ever. That's nuts, okay? So we came flying out of the gates. But obviously, things haven't quite trended that way anymore, okay? Look at recently, for instance. This is just in the past 5 days. The Dow was the NASDAQ was 12,000 plus. Look where the NASDAQ is today, 11,400. So if it had that positive correlation on the upside, guess what's going to happen on the downside? If the market starts to go down here, oh boy, suddenly those buyers start to dry up more and more and more. The more you tank the market, the more people feel less confident, the more likely they're not going to buy a new home or they'll cancel a contract or whatever it may be, okay? Check this out. This might be even a bigger deal, okay? Check this out here, okay? This is mortgage loans, right? And so this is just on a $300,000 loan amount, which we know obviously Toll Brothers is a whole different stratosphere. That's like jumbo loans there, right? But down payment 20%, credit score in the ballpark of what Toll Brothers has on average, right? You're paying a 7% mortgage rate, okay? Now look what happened here. Mortgage rates kind of topped right at the end of December into the beginning of January, and then they just fell all the way through basically the beginning of February, okay? And right there is where they bottomed at, okay? And so as, obviously the stock market was going up, mortgage rates are going down, Toll Brothers started to see an influx of buyers. Oh, who would have ever guessed it, right? But guess what's happening now? The stock market has started going down again, and mortgage rates are going to basically all-time highs again, right around, not all-time highs, okay? highs in terms of the last, since I've been an adult for the last 15 years or so, okay? So check that out. Isn't that interesting? So if I had to guess, over this next few weeks, if the market keeps going down, and let's say over the next few months, let's say for whatever the reason the stock market's weak, okay, and let's say mortgage rates continue to be 7+% on a 30-year, even if you got good credit, guess what's going to start happening to Toll Brothers buyers? They're going to start drying up again, okay? They're going to start disappearing again, and that commentary around feeling good about demand and all this stuff is going to easily go away very, very rapidly, okay? Very, very rapidly. That's the way this game goes, right? Now, next thing I want to talk about here, right? Because you might say, why didn't I hedge in terms of playing Toll Brothers? Like Toll Brothers or home builders in general seem like a natural hedge. If you want to protect yourself, let's say you think the market's going to tank, why not do the home builders? The reason I chose to do a Home Depot hedge, S-Dow hedge, and SH hedge rather than Toll Brothers, although I could potentially later on down the road if the stock keeps beasting and I'm confident things will get worse. The reason I didn't do this is for a few reasons, okay? One is I'm very understanding of their backlog. So I'm very understanding that they're going to put up great numbers still throughout the next couple quarters here because their backlog's so big, okay? And so sometimes people can look past the fact that contracted volumes are down 50%, their backlog's shrinking. They're just going to look at the top line numbers and be like, oh, revenue's so amazing. Oh, net income's like record highs. This is phenomenal, right? So I'm understanding of that. The second thing I'm understanding is margins could definitely increase in 2023 for these companies, okay? All the home builders, they got hit with a ton of inflationary pressures in 2022. And a lot of those have obviously gone away. And so a lot of these companies could have margins that come in pretty much around the best they've ever had in terms of margins, okay? And I'm very confident there's something in the algorithms in the stock market that if it sees a stock reports a margins going up, like it automatically buys. And if it sees margins going down, it automatically sells, okay? I've been doing this for 15 years. I'm just pretty darn confident that, okay? I always see it consistently. When margins surprise the upside, the stock moves up. And when it goes down, the stock goes down. So I'm pretty confident in that, okay? So that's kind of working against you. And the last thing is these stocks don't usually trade at a super big PE ratios, okay? So for that reason, it doesn't make it a super attractive hedge unless these stocks continue to roar higher into this year, and then you become confident that real estate could be down for a few years. That's when it can become a very attractive entry opportunity to maybe buy some put options for a hedge in the portfolio, but it's not quite yet, okay? It's not quite yet. And so that's why I don't do it as a hedge, just because I look at it and I'm like, of the stocks that have downside, in the short term here, there could definitely be some stocks that have more downside, okay? Now, in terms of this whole inventory, we're light on inventory or something like that, baloney, okay? Absolute baloney. I just typed in, Vegas in general, right? In around the valley, and 7,000 plus agent listings right now. Okay. Zillow, I like how they only show a few rather than show a million dots on there, right? They only show a few just to kind of make you feel like, oh, maybe there's not that much inventory. And then you start to zoom in and you're like, oh my gosh, there's homes for sale everywhere. 7,000 plus agent listings in Vegas right now. Inventory is piling up in Vegas right now. Okay. You're going to tell me that's going to be good for pricing? No, pricing's going down a lot more as this year transpires here, okay? If we pull up Phoenix, I got a house in Phoenix, right? Look at that, they only show a few dots there. Oh, come on now, quit playing. Look at this, 15,000 plus agent listings for sale. That's incredible. Inventory is piling up in Phoenix right now. And don't just think about that. Think about how right now we have pretty much a record amount of homes that are coming online right now, right? So you put all these pieces together, and I can tell you it doesn't bode well for the housing market over the next year, if not the next several years. And the next several years will be predicated upon how the economy does, right? If the economy stays decent, if we have the soft landing, or let's call it no landing, everything's smooth, then we can bottom out real estate at the end of this year or at some point in the first half of 2024. But I can tell you if the economy weakens substantially and we have let's call it medium landing or hard landing, in that situation, we likely won't bottom real estate in that situation until 2025 or 2026. So the bottom line is, the moral of the story is we're nowhere close to a bottom, in my opinion, in real estate, and it's not the time to play these stocks. Not right now, okay? Although I love Toll Brothers, great company, just not right now, not in this market. Hope you guys enjoyed today's video. As always, I appreciate you. Much love, and have a great day.